is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, a holiday weekend, Memorial Day weekend. Want to wish everyone a great Memorial Day out there. Make it a safe one, folks. Love coming out of you makes you happy. The whole world can love you, but that is not the love that will make you happy. What will make you happy is to share all the love you have inside of you. That is the love that will make the difference. Market-wise, let's take a look at it out here. We have the Dow Industrials up 17, NASDAQ up 23, S&P's up 3.5, gold contract down $11.30, trading at $1,211 an ounce. Silver down 14 cents at $16.20 an ounce. Platinum down 16 bucks at $9.76 an ounce. Copper flat at $2.10 a pound. Light sweet crude down 18 cents at $49.30 a barrel. Bonds. You have the 10-year notes down 12 ticks, 129.16. 30-year bond off 19 ticks, 163.31. King dollar up 563 ticks, trading at 95.72. You have the euro at $1.11, and the yen is trading at $1.10. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so your high on the 20th of April is $210.92. We've hit $210.10 today. Contraction of volume, which you can expect coming into this holiday weekend. On Wednesday, we did 79 million shares in the SPY. Yesterday, we did 55. Today, we're going to probably do about 45. Bottom line, I expect what you're going to see. So picture this. We come back Tuesday. Tuesday and Wednesday is window dressing. This thing is going to jam, meaning get up into that high. And the S&Ps look like to me that they can at least test the high, which is that $210.92. NDX 100, the 3 Qs. What do we have in the 3 Qs? 3 Qs, contraction of volume. Right now, we're trading at $110.05. The gap is $110.15. Same deal with the NDX 100. Wicked contraction of volume. Wednesday we did 38 million. We did 21 million yesterday, and today we're going to be lucky whether we do 15 million. When we take a look at this and we put this on even the weekly basis, what you're going to see is that this high that was generated in April, it looks to me, even in the Qs, that wants to get hit, and that's 111.33. Inside the Dow Industrials, what do we have? So Dow Industrials, they're trading at 17,848, and the high up there, we're talking about the 18,167. That's a different situation whether that high is going to get hit. You know, it looks to me like the SPYs want to do it, the NQs want to do it. We go over to the small caps. We take a look at the small caps. The small caps, I believe, are right there right now. Yeah, so the small caps traded out to a price point today of $114.50. 115 is the high. The small caps are going to close up here. I suspect on Tuesday they're going to run over that level, and then what's going to be game inside the small caps is actually, when we take a look at this, it'll be the highs that were generated out here in December of 2015, which is a lot higher. You know, so it's going to be intriguing to see how it comes after this swing in the small caps of 115, because that's going to put on the table that you can go to $120, which is a big number. Gold contract. What do we have with gold? Janet Yellen come out 115 doing an interview. Bottom line, gold market didn't like it. Bond market didn't like it. Gold down $11. You're trading at $1,211. We've done 183,000 contracts. Now, this is going to be really tricky, man, with this gold deal, and this is why. So your swing point is right where we are. It's 1211.80. That's the swing that was generated on the April 1st. Where we broke out from is 1200. So it looks to me like 1200 is game right now. When we broke topside in February, we went from 1200 to 1263. That's on the table right now. The GLD, which trades the ETF structure, now that's pulling back with dramatically lighter volume, which is bullish. Okay, we're down $1 right now. You're doing 6.5 million shares. You're going into 11 million. So the GLD versus the gold contract looks good, but the gold contract absolutely rules the GLD. Bonds. What do we have with the bond market? Okay, so you get Yellen out there, and her quote is that, let me get the exact quote. The exact quote was something like, she felt that Janet Yellen just said ongoing improvement in the U.S. economy would warrant another interest rate increase in the coming months. Who knows what in the coming months means? That could be 1 month, 2 months, 5 months, all of the above. Okay, that being said, this is what you have. You had the bond market goes down 12 ticks. Now, this is going to be pretty cool how this shakes out. The bond market is saying that it wants higher price, lower yield, even though we're down today. Why? Because we came down, folks, on only 921,000 contracts versus 1.9 million contracts. Okay? So bottom line, what you have here is that bonds still want higher price, and with bonds saying higher price, that to me is saying that the S&Ps want to get hit. I expect you got to keep your hands in your pockets for another week and a half or something. Now, King Dollar. Let's go over to King Dollar and look at King Dollar, because this is where it's going to be really. This King Dollar has everything to do with commodities. Now, what King Dollar has done is this. King Dollar, when Yellen was on, got some juice. We've done 17,000 contracts. King Dollar is at 95.70. This baby can be, and it very well may be, an ABC structure on the way up. That is going to be a problem for the metal market. The A point on this is the lows that were generated at $91.88. That was on the 3rd. The B point was the high of Wednesday, which is $95.60. So it's approximately $4, which would get you a $98. So unless you get a failure here, this is going to be interesting, because it's a small one. I would have to basically get some follow through. It's coming into some large downdrafts, but there's divergence there. But the way this dollar is trading out right now, we could commit to some more problems inside that metal market. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials up 21. Nasdaq's up 23. S&Ps are up 4. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to Tom in Tampa. Hey, Tom, what's going on?
No bolts, man. No bolts.
I know. What a shame, folks. The Lightning lost. That was sad. No doubt.
And what a game, though, man. Right
was.
down to the wire, you know.
It was.
I tell you, Pittsburgh's got some serious fans, you know. Man, I couldn't even hear the commentators there the last 2 minutes of that, man. They were just like, wow.
Yeah, and they played hard, man. They were fast. They didn't stop. So it's definitely how good a shape people are in too, man. And they just didn't stop. 7 games takes a huge amount out of everyone, I suspect, you know.
Right. Hey, Tom, can we take a look at that U.S. dollar? I know Andy's mentioned a couple of times that bullish reversal there on the 31st, if it closes above that 95.21 area.
Right. And right now it's a problem. It is no doubt. So if we take a look at the dollar index, folks, when I say it's a problem, folks, it's a problem if you're long metals. Which I'm long metals. So we're at 95.71. And what we did out here today is this, okay? So what you did is that we hit a low out here of 91.88. That low was generated May 3rd, right? You know, it has the you go up, and you know, it's not that you had a huge amount of volume going up. You know, it wasn't bad, but for what it was going into, it's going into a lot heavier volume on the way down. Now that being said, what you can do, folks, many times, all the time, is you can do an ABC up inside something that's still going down. You can do an ABC down inside something that's still going up. And in this context, there was a question in the den, too. And what the question there in the den is, how big does a leg have to be to qualify as a B leg? Not every couple bars to the downside is a B leg. And so what Danny's talking about here is that I'm saying, okay, this is an ABC up. It's only like 1 bar down. Well, that can happen. Sometimes you get a sideways movement. You know, what you have to pay attention to and not discount is that we're over 95.66 today, and we did volume there of 11,000. We did 18,000 today. So that's the definition of ABC up. You know, so the real question is going to be, you know, can it make it through the 95.98? And where I'm going there, folks, is this. When we came down on March 10th, we came down with 71,000 contracts, okay? So that could stop it dead in its tracks. But right now, Tom, this is going to be, I suspect Tuesday is going to be pretty dicey here, man, for us in the metals market. That's where it looks. If we go over to the gold contract for a second, we look at gold. The way that gold is traded is actually, it's dangerous, but it's pretty good. And what I mean by that is this, is that this contracted, and it does have lighter volume, because when we went topside on the, it's a different contract, but on the 11th of February, we went topside with 274,000 contracts. We're coming down with 184,000, but you're at 1211, so the question is are you going to get to 1200? When you look at the GLD, it's also positive, but it's going to be Sunday night. Well, what will happen is that even though we're closed Monday, folks, Sunday night gold will be trading in Asia. So we'll see where that baby shakes out.
Yeah, that GLD doesn't have much volume behind it, but they're going to the downside. So to me, it looks like it's holding up pretty good, actually.
No, the GLD is positive. It absolutely is. All I'm trying to do here is not discount that the dollar did take out its B point.
Right.
So, but no, I agree. I would have rather see the dollar index not get over that high and not have volume. But bottom line is that we have what we have. And
right.
Cooking, brother.
Thanks, Tom.
Have a great one, man. Have a safe weekend. Let's go to Carlos in California. Carlos, what's happening, brother?
How you doing, Tom? How are you?
I'm doing great, man. You ready for a good weekend?
Oh, I am, and I want to thank you for staying live on this show. I thought it was going to be a recorded one, and no, you're very professional. Thank you.
No, we appreciate you growling and prowling out here with us, man. Totally.
Tom, today I want to ask you about silver, the mini contract.
Okay, so let's take a look at it. We got the silver contract. Okay, so silver today, we're traded at $16.19. Was down $15. Okay, go ahead.
I bought it a few minutes ago.
Okay.
Right after Ellen spoke on the interview.
Okay.
And I've tested a little bit this contract and expecting a rebound.
Yep.
What do you think?
I think this is a good place to buy it. Okay. So this is what you have here, right? You're coming into your breakout area. The breakout area in silver, folks, is $16.22 April 19th. We're at $16.19 and you pull back with lighter volume. So you have a lot of support here, underneath you. I mean, big time, too. It's $16.20. So you can take the highs of starting going all the way back in February 16th. It was trading at $16.02. It was trading at $16.20 on the 17th of March. On the 18th of March, it was $15.96. That's going to keep you some really good support. So I think you're at a good spot.
Tom, I'm sorry to interrupt you.
No.
Comparing silver with gold, which one do you think it'll be a better play at this point?
This is what ends up happening. What you're going to hear off me is I like trading the gold contract better because silver they're both volatile, but silver is so volatile, it's unbelievable, man.
Yeah.
So when silver wants to go up or down, man, I mean, it takes, let's put it this way. It's too fast that I can set up more trades around the trade, okay? Where gold, it's volatile. Just to give you an idea, folks, if gold's volatility during the day, let's say gold is up 2%, silver will be up 4%. If gold's down 2%, silver seems to be down 4%. So I like the leverage in trading, there's no doubt. That silver, though, I don't like, because I don't like how, if you hit it, you can make a lot of money, but if you're wrong, man, you can just lose too much money too quick. Do you know what I mean?
Yeah.
So if you trade the silver, the way to do it is do it inside the Nadex. I just start trading the mini gold contracts. The mini gold contracts are dynamite, Carlos. If you want to, trade those, they work really well. And if you trade those, I would suggest the way that I do it. See, the pit opens at 8:20, folks. What I like to do is trade that contract at about 6 o'clock in the morning, 6:30 in the morning. Because what has happened is that it's already traded overnight in Asia. I get somewhat of a decent feeling of how it's trading. Our pit's not opening, until 8:20. Electronically, it's trading, but when the pit opens, that's what really can move it. And so by 6:30, even 7 o'clock, which is what, 4 o'clock in the morning your time, you can get a good feeling of what you think it's going to do. And then what ends up happening, folks, is that when the pit opens at 8:20, the movement's there. So if that movement goes with you, all of a sudden you're in the money, you're putting your stop up, and then you got to trade for the rest of the day. Do you know what I'm saying? So, and if you're wrong, then guess what? You're wrong and you're out, and it's still early in the day.
Thank you very much, and have a great weekend.
You too, man. Have a great one. Have a safe one. You stay right there, folks. We'll come right back. Dow Industrials up 20, Nasdaq's up 22, S&Ps are up 4, gold's down 11.80, silver's up 15 cents. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at the oil contract. Oil hit $50 this week. This contract here is trading right now at $49.38. And the way that this contract is trading, guess what? This oil, this $50 wants to get hit again. So this is going to be pretty wild watching the oil market shake out. $31 this oil was trading at January 20th. You're at $49.38 right now, and I expect before this thing's done that 50.21 is going to get hit again. Now, that being said, if you go and take a look at the oil and gas equities, it's not the same type of setup. If we go look at the XLE, what you're going to see inside the XLE is that it's coming into resistance in a huge way, and that baby is lined up pretty good. Will it test the 68.81? It probably will. That was the high that was generated out here 4 years ago. 4 weeks ago, rather, sorry. The XLF. Now, the XLF, we're going to take a look at this XLF because if, in fact, Yellen and the crowd goes up on rates, short-term overnight rates, we're talking, the banks should be able to make, quite a bit of money very quickly. When we take a look at this XLF, what you're going to see is this, is that we're at $23.78. You're over the high that was generated in April. That high was $23.77. That being said, there's nothing that is indicating here that these things want to get higher. Can they go fill up a gap? Yeah, they can fill that gap. And that gap is just slightly, actually, we're kind of right at the gap. It's 23, yeah, it's pretty amazing. It's 23.78. That's right where we are. So when I take a look at that, meaning the XLF, let's go to look at JP Morgan. So if we pull JP Morgan up, JP Morgan's at 65.31. We'll put this on a weekly. And see, I like this. So this is also saying, bottom line, folks, is that these financials don't want to go higher. So check this out. We came down, and we came down on January 8th. We came down with, this is on a weekly basis, came down with 114 million shares. 114 million on a week. We're up on 58 million this week. And you not only, that's not even the biggest bar that you're coming into. The biggest bar is how you came down last August, which was 147 million. So even at this point, JP Morgan's saying it's not going higher. Let's go look at Goldman Sachs. Goldman Sachs is, this is quite a dog, actually, pretty amazing. Goldman Sachs is down from $218 at $159. Goldman Sachs is saying it's not going anywhere either. BRK, let's look at Berkshire Hathaway, because I believe Berkshire Hathaway is the largest weighting right now in the XLE. I'll confirm that once we finish with this. Berkshire Hathaway, the high was 152. This is trading at 143. This doesn't have any juice over the 143 either. So if we go back to the XLF for a second and just see what's the largest weighting structure inside it, because this changes quite a bit, by the way. Yeah, Berkshire is still number one. Berkshire is 9% of the XLF. JP Morgan's 8, Wells Fargo is 7, Bank of America is 5, WFC, let's go to Wells Fargo. So Wells Fargo is coming up to resistance also. Bring this back for... Yeah, Wells Fargo doesn't have juice either. Wells Fargo tests 51, and you're at 50.70 right now, but still no juice there. Well, we will see next week. So picture, you get a short week next week, Tuesday, Wednesday, Thursday, Friday. You have window dressing Tuesday, Wednesday, first and second of the month, right? You have no earnings coming in next week. So we will have the jobs number on Friday will basically, have something going. Then what I suspect the market's going to basically turn to is the Britain going to leave the European Union? That's going to be a big deal. If we go over and we take a look at the FTSE right now, that'll put volatility in the marketplace. Let's put it that way. If we go over and take a look at the FTSE's trading at 62.70, and that had no volume out here today. But this also wants to try to get up into those highs. This market, let's go to the DAX. This market's still setting up to sell at these highs. I think the deviant part of this is going to be that let's just, 1 second, I'll do this DAX first for us. Okay, so the DAX is at 10,286. And that high is game also in April, which is the 10,474. Okay, so the deviant part, I suspect, is going to be this. If we look at the S&Ps, right, you go to the S&Ps. I'm going to do the cash S&P here. So if I bring this back a year, this is how I think this is going to shake out. This is going to be pretty cool, actually. Thus far, the high that the cash S&P is going for is 2011. 2111 was the high of April 20th. Now, the high right before that is 2116. The high right before that, I'm going back now, that's going back to last year, is 2132. What you're going to have is that you're going to have a spike in between, I suspect, the swing high from April 20th, from the swing high to November 15th. And thus far, we are coming up on those levels and coming up with a lot lighter volume. If I go over just to the SPY for a second, and we'll do this on a weekly basis because we can get a good idea right now on the weekly, just how we're doing this. So if we go back, what you're going to see is that this week we did 330 million. You're going into the highs of April, it had 436. So you get shot by 100 million. That being said, the last high up there, you had 466. The high itself in May, that was really shot volume then. That was 345 million. So you're coming, it's coming into those highs with dramatically lighter volume. If we go into the Qs and we take a look at that on the weekly, what you're going to have, let's put this back here. So the Qs, oh, this is really interesting. So the Qs are coming up with 120 million versus the high of 136. Yeah, see, that's saying it can make it. So the Qs are saying that can also make it to the April high. That being said, guess what? Where this gap is, you're at 262 million, and the high actually had 158. It's going to be that gap, folks. It's going to be that $111.51. That's the number you want to really watch closely, because this is what also happens. What you want to put together is this. You're going to put together, you get window dressing happening. We have summer trading happening now, and what that means is this. Tuesdays, Wednesdays, Thursdays, you have a really great chance of having volume both ways in the marketplace. So those days you want to see, okay, how are you pushing? You're pushing higher with volume, you're pushing lower with volume. That will set up the scenario saying, okay, we're testing highs, you're testing with lighter volume, you get a rejection. See, when we come back, we're going to talk about the metals market, because what we do have in the metals market here, even though that that dollar took it out, you have a contraction on lighter volume, you're just kind of at that cliff. This is Tom O'Brien, this is TFNN. You stay right there, folks. We'll be coming right back. Dow up 32, Nasdaq up 24, S&P's up 5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 33. You get the Nasdaq up 24. S&Ps are up 5.5. And if we take a look at the indices, we know we're going to have light volume. So we have 525 million on the NYSE. That is going to run in. That's not going to be bad, actually, for holiday coming, Friday coming into the Memorial Day weekend. That's going to come in at about 700. We take a look at the Nasdaq Composite. Composite is at 1.2 billion. That's not bad either. It's going to be about 1.4. If we do look at the composite itself, that composite is trading at 49.26. That high in April is the 49.68. And we're going to close inside that high because the bottom of that high is 49.15. So that also sets up that this market wants to get up into that high, and we'll see whether it wants to run to the next high, which is the 4th of December. If we go take a look at now, this is going to be a little a scandal that's going to keep unfolding. And what it is, Lending Club, folks, LC. So Lending Club. This is this equity went IPO. So let's see when this went IPO. This went IPO December 10th of 2014 at $10. Oh, no, $15. Okay. This. I'll pull this back so I can show you this because I'm looking at this as a trip. Okay, so it went at $15. It opened at $22. It traded up to $29 the week after it opened. From that point on, this stock went one way and went down. Now, what Lending Club does is this. Lending Club is a peer-to-peer, lending service. And what has happened, it's really wild what has actually happened inside all these peer-to-peer deals. All of this actually is, folks, is hard money that is wrapped in an internet company that for some reason people bid up, and they bid up in a dramatic way. Now, if you don't know what hard money is lenders that will lend at 12, 13, 14, 15%, 18%. Well, just about anyone should be able to get money at that. Just about anyone can, okay? Now, that being said, this is what ended up happening. So the way they make their money, of course, is that they need investors to buy the note. They need investors to sell the note to, all of the above, right? So they make the spread on it. Well, what happened is that inside this company, the CEO, the founder, bottom line, had backdated some loans as they were selling them, okay? So he got caught doing that, and we'll find out whether that's illegal, legal, I don't know. Bottom line is that the board canned him. But that's not what the story's about. So check this out. This is a trip. So this just came across the tape. So John Mack, who used to be the CEO of Morgan Stanley, this just came across a few minutes ago. When these stocks went down, the founder borrowed money off John Mack, and he borrowed that money so that he got a margin call so he could stay in the equity. That's the first part. Then the second part goes like this. The second part goes that then he went to Morgan Stanley, gets a loan on his house in order to keep the shares, okay? That being said, now watch this, because this is kind of unfolding as we're doing it. So then I went over and I said, okay, let me see the ownership of this, right? And what ends up happening is that when you take a look at the ownership, we've done this a million times, right? You take a look and say, okay, who owns what? Well, what's really intriguing to me in here, there's a couple of different things. One of them is that Morgan Stanley, even when the stock was going all the way down, kept going down. Bottom line, I don't know if it's their funds or it's them, they were still buyers. They own 9% of the equity, 34 million shares. They bought an additional 9.3 million. And what's going to be intriguing here to see if, in fact, because it was an analyst that basically, I think they're bisecting and dissecting this filing right now, because the filing just got done, to see whether the CEO actually doubled down. It looks like, and this is really going to be weird, it looks like many companies are doubling down on this equity as it goes lower. So it's going to be like, man, you got to be kidding me. You know, so we'll see where this whole thing shakes out. You know, it's the thing that cracks me up about the business is that they are getting a lot of business, but that's all it is hard money. And, you know, guess what? When we have low interest rates, and there's money out there, but I can't figure out how people can ever make money getting hard money. Because, you know, if you get hard money and it's 12, 13, 14%, it's like, you're going to be kidding me, man. I mean, you make one mistake in getting money like that, you better have spreads that are astronomical in order to make money on that. You know, and I just don't see that business model as a monster that's going to continue to grow. It's always been out there, and it is a good business model for people who need money quick, and if it's an outrageous deal and you're getting more. But on a growth pattern, I just don't see everyone in the whole United States and the world paying rates of 12, 13, 14%. Why? You don't have to. There's plenty of money out there, you know, at a lot cheaper. You just have to go find it, and it's out there. Let's go take a look at good old Google. So Google out here today, Google was last night actually. They won a pretty good case against Oracle. Oracle wanted $9 billion for the Android software, and Google basically won the first round. That being said, Google doesn't look, it's up 850 today, but Google's coming into some big resistance. I mean big time. Amazon, we go to Amazon. We take a look at Amazon. We have with Amazon. Amazon's still hanging out here at the $712 level. Excuse me, folks. And look at that, man. This is crazy. So Amazon, folks, the longer that it stays over $684, the longer that it actually can make a leg up in the marketplace. This is wild, man. But that's how it's shaking out. Yeah, we'll see whether it takes another leg up and just really jams it. You know, what is going to happen is that we're going to have about 2.5 weeks that the market's going to have a chance to do something before the July 4th holiday. Let's go back to the gold market for a second. We'll take a look at the XAU. XAU out here. Now, this is where the XAU hasn't broken down yet. The HUI hasn't broken down. The XAU, we're trading at 79.53. What we've done is we've come back with 172 million shares, and you're going into 267. So we still have to add in today's volume. Let me just do this 1 second. 267. Yeah, this is good. This is really good because the XAU normally does about, let's say, it did 36 million yesterday, so that means it's only going to do about 20 million today. So that's pulling back with dramatically lighter volume on the weekly, which is crucial. The Gold Bugs Index, we're at $198.69. And if we take a look at this is pulled back with 97 million, and you're coming into 140 million. That's cool, too. 97, and we can add another 20 on that, so that's 107 million versus 147. That's a good deal. You stay right there, folks. We'll be coming right back. Dow Industrials up 36. NASDAQ up 28. S&P's up 6. If you are driving, folks, no drinking and driving this weekend. Take Uber, take a cab, take anything but getting in that car. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over and take a look at FCX for one of our targets, Freeport-McMoRan. So Freeport-McMoRan, folks, the low for the year out here is $3.52. The high is $21.02. Right now, we're trading out at $11.14, and you know you're building cars. You know, I mean, if you're looking to buy it here, yeah, you can buy it somewhere around the 1050 area. That's where that's shaking out. Now, don't forget, folks, I want everyone to have a safe weekend. And remember what this weekend's about, folks. This weekend's about all the lives that have been lost, okay? Please, okay? Remember why we're here. Remember why we can have a beer. Remember why we can have cookouts. Remember why we can have a great country. Have a great one. Have a safe one. I'm going to leave you with a great song.
Liberating strife, who more than self, their country to love. But she's 49 times tonight. America, sweet America. May God not go refined. Till our success be nobleness and every gain divine. And you know, when I was a youngster, we always sang it this way. Oh, beautiful, far spacious skies, far hammer in the rain. Far purple mountain, in majesty. Above the fruited plain. Wait a minute. America, America. God shed His grace on me. Oh, yes, He did. He cried out like He told me He would. Said it, brotherhood, from sea to shining sea. You know, I wish y'all would come a little bit longer. America, oh, I love you, America. Well, my God, He done shed His grace on me. Y'all ought to love Him for it, 'cause He crowned like good. Yes, He did. Said the brotherhood.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.